Talk of the tape, the mega week for the mega caps, not to mention the Fed decision tomorrow. Oh, yeah, don't forget about that. Let's welcome in Adam Parker. He's the CEO and founder of Trivariate Research, a CNBC contributor. He's back here at Post 9. It's good to see you.
Good to be here.
So your notes jump out to me today because you say the probability of the bear case is higher than it was at the beginning of July.
Yeah.
Why do you think that?
I think I got more negative looking at the totality of the consumer health last week. I mean, if you really look at the major, I try not to focus on one little company that's small, that misses, and take a big picture. If you look at restaurants, Visa, housing, the autos, like the consumer slows. The consumer's slowing, and I think when we articulated our bear case, one of the things we pointed to that could get us more cautious is a consumer that's slowing down. And I think that mark to market is what happened last week. So on the margin, you have to be a little bit more negative on the economic health, I'd say.
I mean, I'll see your slowing,
yeah,
but I'll raise you rate cuts.
Right.
Doesn't that matter?
It does matter. I would argue that the market is a little bit ahead of the Fed, right? Meaning that the market was certainly anticipating some accommodation.
But you don't think it's going to happen?
Well, I think it will, but I think that some of it's in the price. We track this rolling relationship between Fed fund futures, so what people think the front end will be 2 years from now, and the price to forward earnings or the multiples for growth stocks, and it's currently around zero, meaning the market doesn't actually know if it's going to be great at the moment. Obviously, 21, 22, hawkish, terrible for equities, terrible for multiples, but I think right now people are confused. There's a lot of competing data. Maybe they have to cut a couple times, then next year you get some tariffs and you get some inflationary pressure, and then I don't have a clear path that it's you don't have to hike. So there's more confusion, uncertainty, and I think that's why I'm not exactly sure it's like awesome for multiples and enough to offset the slowing earnings.
You actually think that the Fed cutting in September could be a sell the news event?
I do. And I wrote that in my second half outlook. It does sound, your facial expression is merited, because in the last 15 years, I'd be certainly stupid to fight the Fed. And I and everyone else has said, don't fight the Fed. But I think this time, the question is like, why are they doing it? Is it because the economy is really slowing materially?
Both. They're doing it both because inflation's come down.
Right.
And yeah, the labor market's softened enough that they now need to err on the side of a little bit of caution. Before it was, hey, we don't want to go too soon. Now it's we don't want to go too late.
So I think the part that I feel confident in is that the week-over-week change in the Fed balance sheet is statistically significantly associated with the week-over-week change in the equity market. So if I knew the Fed was going to do a ton in the balance sheet, in addition to the front end, I wouldn't be questioning. As I've been out marketing the last few weeks around, I don't think it's as crazy when I talk to investors. A lot of people say, yeah, I could actually see a little bit of a sell the news this time because it will only be happening of more uncertainty and kind of a surprisingly slower consumer. So I thought it was going to be a little out of consensus or crazy. And as I talked to, I'd say 30% of people kind of agree with me that it could be a sell the news thing this time.
Would you think that if the mega cap tech stocks and the sector in general wasn't underperforming lately, does that only add to your skepticism about the market as a whole?
I mean, I actually think we're going to end up, we get at the end of earnings season, I think, NVIDIA at the end of August, that we're going to end up higher on some of these names. I think right now there's a rotation, and there was a little bit of for 6 months it was innocent until proven guilty on anything related to AI. If I could dream the dream, didn't get a negative data point, I was in. And I think we had a little bit of a reality check, a little bit of, people, questioning the profit pools and the time to returns on those investments. But when we get to the end of the month, we're going to hear all these applications from NVIDIA, what's real, and I think these stocks are going to end up being pretty good risk reward at pretty good valuations. And I don't think you can step back and say they're crazy expensive anymore. You're going to say, NVIDIA's 105, what was it, 138 in June 18th or something? So it's not like there isn't a little bit of, frosting off the cake.